girl Cha Cha recording live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that sounds like you, welcome or welcome back to my channel. I do appreciate each and every person who took the time to click on this video and who has spent time on my channel because I am here to help. Now, I do want to let you guys know that I have officially relaunched the Money Mantra Trading Academy on a different platform. So if you're interested in joining my community, working one-on-one with me, you can find that information down below in the description box. And the really cool thing is I'll be offering a free 7-day trial to my community from now until May 1st. But if you just want to get right into it and save 10% on your plan, again, you can find that information down below. Now, in today's quick video, we're going to be working on Tradelocker, which is the trading platform that I use. It's pretty modern, and I think it's awesome for new traders to be able to see everything in one place. Now, if you've ever used TradingView, you're going to notice how similar TradingView and Tradelocker are. But if you do want this to be your trading platform, you would have to find a broker that offers it. I would do that by going to Tradelocker's website, seeing what brokers they offer, and see which ones are available in your country. Now, let's get into it. Today, I'm going to be showing you guys different ways that I look for reversals in the market. And reversals just come when the market has a change of direction. And we're going to focus on how do you identify that so that you find the best entry for yourself. You don't want to get into the trade for a buy and then it automatically starts selling, or you don't want to get in for a sell and then the market decides to turn around and start buying. Now, if that has ever happened to you or someone you know who suffers from getting in at the wrong time, just go ahead and comment a 7 so that I know that you're following and that this is going to help a pain point that you may be suffering with. Now, one of the first ways that I like to look for a reversal, or one of the first things that I'm looking for is what way has the market currently been trending, right? Because if you're new to trading and you're just looking at a chart, it can get a little bit confusing, but I want your eyes to be able to identify certain things like a downtrend, an uptrend, and a period of consolidation. So when the market is going down, you'll notice that the shape looks more like a downward slope, right? You will see more red candles than green candles, letting you know that the sellers are picking up momentum. You will see that the shape is facing down. And last but not least, the more technical way to look at it is if this is a selling trend, for example, if we're looking from here to there, as the market is dropping, we can see that this was a high point and then the market started to form lower highs. This means that its price is dropping. The market is still going up and down, but the highs are getting lower and they're called lower highs. And the lows are getting lower. These are called lower lows. Now, this is important to be able to recognize because as you get into your sales, you would want to use these previous lows as your take profits and these previous highs as your stop losses. Now, for a buy, it's literally going to be the opposite. You will see a series of green candles or more green candles than red candles in a series. You will see that the shape appears to be facing up. And just like with those lower lows and higher highs, this time, if we were looking at this section of candles, we can see that the market is pushing up and consistently, slowly but surely forming higher highs, right? And as the highs are getting higher, so are the lows, and these are called higher lows. Now, if that makes sense so far, just go ahead and drop a 7 in the chat. I love to know that you guys are paying attention and understanding what I'm trying to explain. Now, the third way that a market could be moving is known as a period of consolidation. And with a period of consolidation, you will look at this market and not be able to determine if it's actually buying or selling. And that's because it's not. If we look at this small area of the chart, we can see that we have some red candles followed by some green candles. And we have some red candles and we have some green candles. Now, I know you're probably thinking that the market does this all the time. What's so special about a period of consolidation? But here we will see that the market is distinctly buying at a key level and the market is also distinctly selling at a key level, trapping it in a range until, of course, we get our confirmations that this consolidation is broken and the trend is either going to continue, which way it's been going, or it's going to turn around. Now we're going to talk about sell reversals first, since we're on this part of the chart. And I really want you guys to follow along. And by the end of this video, you should be able to apply this and back test it to see it for yourself. Now, one way that I look for a reversal is to say which way the candles are going or which way the market has been going. Now, if we were to look at this brief period of the chart, we can see that the market was going up strongly. And then we ran into a period of consolidation. Now, once you have a period of consolidation, what you want to look for to distinguish if this is a reversal or if the market could be changing or not is you want to look for a break of structure. Now, a break of structure is exactly what it sounds like. The market is going to break out of that period of consolidation, either up or down. For a sell, you want it to break below the consolidation at the bottom, and for a buy, you want it to break out of the consolidation at the top. Now, I know you're probably thinking, okay, what about this green candle that broke structure? Yes, that was the first sign. But in addition to the break of structure for a reversal or a trend change, you also want to have a retest of the level that was just broken. And this is exactly what it sounds like. I don't want you guys to get confused by what I'm saying, but we can see that the market broke structure here. And then we can see that this previous level that was support, which is here, right, that we expected the market to continue at, it actually turned into a level of resistance, further pushing the market down. Now, if you guys can see that, just go ahead and drop a 7 in the chat, right? And this is for a sell. You're going to see a break of structure, and then you're also going to see a retest of that previous level of support as resistance, confirming that the market wants to go lower. Here's another sell example. And I'm actually looking at this on the 15-minute time frame. So this may not seem like a long time, but this is actually about an hour and 45 minutes worth of price action. So we had consolidation, we have our break of structure, and then once we get that break of structure below on this huge red candle, we can see that price is forming those lower highs, is not getting as high as the previous high, and also there was a retest as previous support for resistance, pushing the market down, and we could have used a previous low as our take profit. So that would have been a successful trade idea. Now, hopefully this is making sense to you. If you have to watch this video again, just watch it as many times as you need to, because the information is really simple. It just comes down to repetition, consistency, and the discipline to get this right. Now, if you're going to be looking for a buy to see if the market is going to either continue buying or break out from a selling trend, you will want to see a break of structure above a period of consolidation and then a retest of resistance as support. Now, this is going to sound pretty wordy, but the more you practice this and the more you look at it, you will be able to see exactly what I'm talking about. So let's go ahead and look here where we can see that the market was consolidating. We were expecting it to continue to sell here. We were expecting it to continue to buy here. But what do we find? We find a break of structure above our consolidated period. And then we see price not moving back into that range and continuing to push upward. Here's another example of a few hours of consolidation. We have the break of structure on this huge green candle, and then we don't see price getting that low anymore. So that's the first way that you can identify a reversal or to see if the trend is going to continue the same way. It's all about knowing what's going to happen next based on the data that you have. Now, the second thing that you can do is add some type of indicator that lets you know about the momentum and the trend. And the indicator that I love to use for this, and I talked about it in so many videos, is the stochastic. It has so many different features and so much information that it could tell you about the price. But I love using it to help me spot reversals because of the information that the stochastic provides. Now, what you're going to notice on this indicator, and let's just make it big, right? What you're going to notice on this indicator is that it is comprised of a few different parts. There is a shaded background, there's two lines, and then you'll see a few dotted lines. Now, for me, if the market is buying, right, if I'm going to be looking for a buy reversal, one thing that I'm going to want to pay attention to is where is my stochastic? Now, I'm going to highlight this for you guys a few times, but I do encourage you to get on your charts and back test it. Now, let's just say the market is coming off of a strong selling period and we run into an area of consolidation like we see here. To confirm that the market is going to continue to buy, I want to see that my stochastic is crossing above 20. And I'm just going to highlight some areas where the market has come from consolidation and the stochastic crossed above 20. And we're going to be able to see how that is a really good indication that the market is going to turn around. Now, if you guys can see, I've highlighted about 4 or 5 examples so far. And if you can see how the consolidation and the stochastic being at 20 coincide with a buying market, just go ahead and drop some sevens in the chat for me. This is one of those things that once you see it, you can't unsee it. And even if you are a little bit confused, go on your chart, add the stochastic, and look for periods where the stochastic was crossing above 20, and then come back to this video and let me know if the market was buying at that time. Here's another good example. We have that period of consolidation. We have a break of structure. We have that retest of resistance as support. We also have that break on the stochastic. Now, for a sell, this is going to be the same thing but opposite. That's how it works with trading, and that's why I love it. And this time, we're going to look at what happens when the stochastic is crossing below 80, which is the top line. And what you will notice is that once the stochastic crosses below 80, that's usually a strong sign that the market is going to sell. So let's look here. We have our period of consolidation for about 2 hours. We have a break of structure here. Not only do we have that break of structure, but we also have the cross down on the stochastic. Here's another example. We have a short period of consolidation. We have that break of structure, support retested as resistance. We have the cross on the stochastic below 80. Here's another example. We have a period of consolidation. We have a break of structure. We have support retested as resistance. We have the stochastic crossing below 80. So these are just two ways that I look for reversals. I like to use the stochastic as a strong indication to tell me about the momentum, to let me know about reversals, to let me know if there are too many buyers or sellers in the market, and which has a higher probability of happening, a buy or a sell. So if you made it this far in the video, I really hope that you learned something. Just go ahead and hit the subscribe button so that you never miss when I post new videos. If you guys are interested in taking advantage of that free 7-day trial to my learning community, where you get access to an online course, you get access to weekly trade ideas, one-on-one coaching sessions, and just an overall community feel, I do have that link down below in my description box. And I really do look forward to seeing you guys in class. But that's really all I have for you guys today. Until next time, rich friends.